The Eurozone is telling India stop selling us imported Russian oil. Now we are entering the twilight zone where the West is trying to go after India for trading with Russia. And if there was ever a rallying cry for the BRICS nations to really band together, this is it. This is a classic story of double standards and a poor understanding of the oil markets. The EU is pushing to curb Indian fuel imports made with Russian oil. Basically, these are oil products including diesel and gasoline from Indian refineries that is made from Russian crude. Europe has been buying a ton of oil products from India since the start of the conflict, and they are pissed off. And it's really easy to understand why. Russian revenues are still flowing while India is making a killing selling refined oil to the Eurozone. And check out this headline: Russian oil still powering Europe's cars with the help of India. And this is a direct consequence of the Russian oil products ban back in February 2023. We can see a huge rise in Russian crude imports from India. It went from near zero to over 2 million barrels a day, and that is the yellow line. And from the white bar, India's fuel imports to the EU are starting to grow. It is reaching almost 360,000 barrels per day. So the oil arriving from Russia is growing and at a huge discount. And if your feedstock to the refinery is cheap, the margins we will make selling refined products will be fatter. Now, this part is very important. India is getting their oil from Russia at a $13 discount per barrel on a delivered basis versus Brent crude. And that is anywhere from a 15 to 20% discount all priced in. So you can kind of understand why the Europeans are angry because higher energy costs is bankrupting the Eurozone. They're still buying oil from countries like the United States and Saudi Arabia, but at what cost? Because essentially, if India is getting a consistent 20% of the market price in their oil supply, their economy will outpace Europe. Even if they don't resell to Europe, their domestic economy will boom, which is exactly what's happening. Listen to this. According to the IMF, India is slated to be the fastest growing economy in the world. We are talking about an incredible 5.9% GDP growth in 2023 compared to the EU, which is barely expected to hit 1%. Now, the EU is obviously unhappy with this turn of events, and oh boy, are they going after India today? But as you quickly see, this isn't going to work, and India will just give them a judo flip. Now, the chief EU diplomat Joseph Borrell told the Financial Times that Indian refiners were buying large volumes of Russian crude oil before processing it into fuels for sale in Europe. And he goes on to add that India buys Russian oil, it's normal. And if thanks to our limitations on the price of oil, India can buy this oil much cheaper, well, the less money Russia gets, the better. So we know that part already. India, together with China, they are benefiting from the price caps on Russian oil. And here's the juicy bit. But if they use that in order to be a center where Russian oil is being refined and byproducts are being sold to us, we have to act. And there's a clear correlation between India's Russian oil imports soaring and India's shipping more fuel to the EU. It's quite remarkable seeing the volume of Russian oil India swallowed up, right? They went from 1 million barrels in February 2022 to over 60 million in April last month. And correspondingly, their fuel exports to Europe have tripled to almost 7.5 million barrels a month. And this is simply called the free market. The EU has sanctioned themselves away from Russian oil, but they still need diesel to function. So India picks up the slack, refines Russian oil for the EU, and sells to them at a profit. That's economics 101. So the EU is angry, but India is calmed and is slapped back. According to Jai Shankar, their foreign minister, the refining process of Russian crude in a third country has transformed it enough. This actually adheres to the EU regulations themselves. And this, of course, is the famous loophole in Russian oil that the EU themselves rely on. Because if it doesn't exist, they couldn't buy any Russian oil in a roundabout way. And this means higher energy inflation and higher interest rates from the ECB. And that will just damage the European economy even further. Now, India will still buy Russian oil because, frankly, their relationship with Russia goes well beyond just the energy trade. India and Russia, they have a strategic partnership that dates well back into the 1970s to the 1960s. And asking India to stop buying Russian oil is impossible. The West is asking India to throw their longtime friend under a bus. And if India does that, do you think the rest of the BRICS bloc will be happy about it? But this isn't the first time India has been criticized. Zelensky's economic advisor has called it completely legal but completely immoral what India is doing with selling the oil products to the EU. But something tells me that India won't break ranks with Russia. There's just too much at stake over here. Now, what the EU is doing is very transparent. It isn't some grand 4D chess move. It's obvious what their end goal is. They want to cut down Russian revenues even more. And let's understand this. If the EU curbs India's fuel exports, then on paper, it would seem there's no point to import Russian crude anymore beyond a certain point. India would have no motivation to buy additional Russian oil above their own consumption. But this is a basic misunderstanding of the oil markets. This is a very flawed premise because you can't sanction the entire oil market. If the Indians stop refining Russian oil, other countries will pick up the slack, and chief of them all will be China and Saudi Arabia. Why do you think China and Saudi Arabia are busy building oil refineries together? They know the world still runs on fossil fuels, and the more refining capacity you have, the more Russian crude you can refine and export out. Now, China has the highest oil refining capacity in the world, with the ability to process over 18 million barrels a day. And with the new upcoming refineries with Saudi Aramco, they could corner the fuel market in the East. And remember that United States themselves have refused to import Russian oil, so they can't help the EU with additional supply as well. Now, Russian oil will simply flow towards China, it'll flow towards Saudi Arabia, and it'll get processed there and then get re-exported back to the EU. This is just a game of musical chairs. Now, if the EU decides to sanction China or the Saudis, they might as well sanction the whole world. They have to target the rest of the big oil refiners in the Middle East and Asia as well. Now, this is a fascinating chart that shows where the West, especially Europe, is getting their oil products from. The majority of refined fuel that originated from Russia comes from four main countries. We are talking about India, the UAE, Turkey, and China. And looking closely, you can see how big the flows are and how dependent Europe still is on Russian oil in an indirect way. Can Europe really afford to cut their oil supply from all these four countries? I really don't think so. You can see how impossible it is to ban the flow of oil if they decide to sanction these oil refiners. All the Western countries, including the US, UK, and Japan, will suffer big time. It's a domino effect. The moment the sanctions were slapped on Russian oil, there's bound to be winners and losers. It'll be Europe that's going to be paying through the nose. If they really cut out India from exporting fuels or re-exporting fuels to the EU, they will still lose. Now, Europe has to buy oil from places like the Middle East and the United States. Prices will still stay the same or even increase, especially if Russia decides to cut their crude production. Now, Putin has told the world that their oil production cut is to support higher global prices. So if the EU cracks down on all refiners of Russian crude, Putin could simply cut production and lift global oil prices once again. And at this point, nothing is off the table. But let's understand this. Countries like India and China will still get discounted oil. It will be the EU that will be suffering the blowback of less refined oil flowing to them. And the story gets even more interesting because Jai Shankar just exposed the double standards of Europe, the hypocrisy of Brussels when it comes to importing Russian oil. And during the press conference with Germany's Baerbock, Jai Shankar gave us a powerful resource to track where the Russian oil is really going. This is very eye-opening. He said, and I quote, "There is a website called Russia Fossil Fuel Tracker that will give you country by country data of who is really importing what, and I suspect that might be very helpful." And looking deep into the figures, Jai Shankar is absolutely right. Apart from India and China, the second biggest buyer of Russian energy is the Eurozone itself. This highlights the double standards that's very hard to deny. We can see since the start of 2023, the EU imported almost 15 billion euros worth of Russian oil and gas, and that is at least 30% more than India. But the story gets even crazier if we look at the total imports from the start of the conflict. The EU has imported more Russian energy than China, Turkey, and India combined. They spent over 154 billion euros on Putin's oil and gas. And this tells us one very important lesson, one very important fact. For all their posturing and lecturing, Europe can't divorce themselves away from Russian energy. If they cut themselves away completely tomorrow, the European economy will collapse. So it's very bizarre for the EU to target India's refining business, right? Even till 2024, they will still be dependent on Russian energy. The EU think tank Bruegel estimates Europe will still be paying nearly 30 billion euros to Russia for energy supplies, but I kind of suspect it'll be likely more. Now, India is seeing a tremendous uptick in exports and is largely led by petroleum products, up by 27% to $94.5 billion, and they are raking in a lot from the refining business. But if the Eurozone blocks imports, then the Indian economy is going to take a hit as well. And that's why India, they're hitting back, asking the EU to take a look at their own regulations. Once again, you cannot control the oil markets. It is too big of a monster even for the Eurozone. It is impossible to sanction the whole world. And my speculation is the EU still wants Indian oil, but at a discount. It's like a price cap for Indian fuel re-exports that originated from Russia. Now, Europe is bleeding massive amounts of money, subsidizing their energy costs, and they can't keep this spending up forever. Now, in 2022, Europe spent nearly 800 billion euros to subsidize rising energy costs to consumers, and by the time the year is out, it could easily rocket past a trillion. So this enforcement of sanctions is to bring down their energy bills, but they are ignoring supply and demand. If India stops exporting to Europe, the EU has to import from elsewhere at a higher price. But let's zoom out and see the ripple effects of this action. De-dollarization is already happening globally, and that's why we are seeing countries like the BRICS nations coming together to align themselves against the West. Because it isn't just dollar weaponization they are afraid of, they are concerned about a biased cartel in the oil markets as well. And one great example is the NOPEC bill that the US is somehow bringing back from the grave into the conversation. It's basically a bill that allows the US to take action on OPEC nations for controlling oil prices. And the rationale is simple: if OPEC doesn't lower the price of oil, we will take action and punish them. Now, I don't think it's going to happen anytime soon. It's not going to go anywhere, but this clearly shows a clear and present danger that OPEC nations can't afford to ignore. I believe that the EU is realizing how badly their sanctions have backfired, and this is why countries like Saudi Arabia are looking to join the BRICS bloc because they want to access the world's biggest trading bloc. And here's an eye-opener that shows the growth of emerging markets. In 2020, the BRICS nations have already exceeded the G7 in terms of GDP in some measures, and this gap is only going to grow. So the EU's move to curb Indian oil isn't really a smart one. It will just cause more oil producers to move closer to the BRICS nations as a backup plan. And if this happens, it will be a terrible blow for both the euro and the dollar. The BRICS nations will just trade using their own currencies or maybe even a common currency. And I think the EU is finally realizing how badly their sanctions have backfired, right? It's bankrupting Europe, and all the benefits are flowing to the Asian countries like India. And that is why the EU is lashing out. But what's interesting is how India is going to handle this pushback. Because if they don't hold the line and they fold, somehow they just cave in, the EU is going to go after China and the other oil refiners next. And the crackdown is going to go global. So let me know what you think in the comments below. Will India keep buying Russian oil? Will the EU crack down on the entire world? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.